Well, okay, so I was looking at the Dixon Technologies report, and wow, their revenue is up like crazy, 117% for the quarter.
Yeah, it's pretty impressive. I mean, the numbers really speak for themselves, don't they? That's a huge jump from the same quarter last year.
Absolutely. And it's not just revenue. EBITDA is up 113%, and profit before tax or PBT is up 127%. It's like they are firing on all cylinders.
Right. It shows that their operational efficiency is really kicking in. That growth in revenue is translating well into profitability.
And the profit after tax or PAT is up 124%. Actually, all the key metrics are showing significant growth. So, what do you think is driving all this growth?
Well, I think a big part of it must be their strategic focus. They are in multiple segments like mobile, EMS, consumer electronics, home appliances, and lighting. If all segments are doing well, then that explains the overall jump in growth. It is like having multiple engines firing at once.
That makes sense. And also, I noticed they granted 15,000 stock options to their employees. It seems they are rewarding their team for the hard work.
Exactly. Employee stock options are often used to align employee incentives with company growth. It is like giving them a piece of the pie, right?
Right? And that can definitely motivate them to keep pushing the company further. So let's talk about these numbers in a bit more detail. They had a revenue from operations of 10,461 crore rupees for the quarter, up from 4,821 crore rupees last year. That's massive.
I mean, it's almost like they've more than doubled their revenue in just 1 year. It is like they've gone from a sprint to a full on marathon and are killing it.
Indeed. And the 9 months ending December 2024 are equally impressive, with revenue up by 119% to 28,577 crore rupees. Wow.
Well, and the EBITDA for the 9 months is up by 106% to 1,074 crore rupees. These are very strong growth figures, actually.
Absolutely. And the profit before tax for the same period is a whopping 173% increase to 995 crore rupees. That shows real improvement in their profit margins.
Mhm. It looks like they are not just increasing their revenue, but also making sure that it translates into much bigger profits. A very solid strategy, I would say.
So these results were reviewed by the auditors, right? I saw a limited review report in there. What does that mean?
Right. A limited review report essentially means that the auditors did some work to check the financials, but it's not as detailed as a full audit. So it provides a reasonable but not complete assurance on the numbers.
Okay, I get that. It's like a quick checkup versus a complete health examination, and it gives some confidence in the numbers.
Exactly. And it confirms that they haven't found any material misstatements that could undermine the results. So, yeah, it's an important step.
Right. Now, let's move on to the segment-wise analysis. It looks like the mobile and EMS divisions are doing really well. They've seen substantial growth.
Definitely, their mobile and EMS division contributed a significant portion to the revenue. It is the primary engine driving their growth right now. It's like the main character of a movie.
For the 9 months, the revenue from mobile and EMS was 23,942 crore rupees compared to 7,828 crore rupees last year. That's a staggering growth of 206%. So it is the driving force behind the company's success, right?
It is indeed. And this segment now accounts for 84% of their overall revenue. It is like if this division is doing well, the company's performance will automatically improve.
Right. Now, the consumer electronics and appliances segment, which includes LED TVs and refrigerators, has seen a bit of a dip. The revenue contribution is down.
Yeah, that's true. It shows that while some segments are booming, others are facing some challenges and maybe need a strategic push or a revision in strategy.
Right. And also in the home appliances division, while the revenue increased, the contribution to the overall revenue is down a bit from 7% to 4%.
Right. And it's the same story with the lighting products, where revenue has seen some growth, but the contribution is down a bit. These could be areas where they might need to strategize more carefully.
Yeah, it looks like they have some work to do to boost performance in these other segments. It's like balancing multiple acts in a circus, right?
Exactly. And I think they are aware of that. That is why they are giving more focus on the mobile and EMS segments, since the growth potential is really high there.
And what about their cash flow and balance sheet? Did you notice anything interesting there?
Well, their net debt to equity ratio is quite low, indicating they are not excessively reliant on debt, which is actually a healthy sign. It means the business is doing well and the company is not overly leveraged.
That's good. And their free cash flow is at 98 crore rupees for the 9 months, which is decent. Also, I noticed their cash conversion cycle. It seems pretty efficient.
Yes, their cash conversion cycle is quite efficient, with debtor days at 51 and creditor days at 84. It's like they are getting paid faster than they are paying out, and this helps to keep the business liquid and healthy.
Right. So, to sum it up, Dixon Technologies is having a phenomenal year with great growth in revenue and profitability. And they've shown a pretty balanced performance in most of their segments.
Yes, their mobile and EMS division is driving the growth and they're managing their finances quite well. But they need to also bring other segments on par. That's how it seems.
Absolutely. And before we wrap up, if you're enjoying this discussion, please remember to like, share, and subscribe to the channel. It really helps us grow.
Yeah, your support means a lot. And for now, the question remains, can Dixon maintain this kind of growth momentum, or will there be some course correction needed in the future?
That's a great question. It'll be interesting to see what happens in the coming quarters, won't it?
Totally. And what do you think are the next steps they need to focus on for even greater success?
Good question. That's something we will ponder over and maybe discuss in our next episode, right?
Right. And until then, thanks for tuning in, everyone.